Please welcome the founder of transferGo, Daumantas Dvilinskas.
Hello everyone. It's good to be back here in Vilnius for login every year. My presentation is going to be in English just for the occasional people who don't understand Lithuanian. Try to be as inclusive as possible with this. So without further ado, let's begin. So today I will talk to you about, I'll try to tell a story of fintech and what has happened over the last 10 years in financial services, just to put some perspective, because I'm sure a lot of you have heard a lot of interesting stuff, a lot of buzz, a lot of media attention is there. So I'll try to maybe tell a story of how the financial services have transformed, what we saw, sitting on the front line of this transformation. And I will talk about also partnerships that we're working on and dealing with new players in the space and in DELFI, and maybe touch a bit about the future, where we see this going. So, does this work? This works, good. So, over the last 10 years, financial services have gone through a fundamental transformation. And the story of fintech started roughly in 2008. And 2008 was a bad year in many, many respects. It was the year of one of the major financial crises the world has ever seen. 2008, and this is a dip there, is when our economy, global economy, nearly collapsed. And we all remember those times. It wasn't a good time. But like all things, all bad things usually have a silver lining, and something very good emerged from that. So in 2008, there has been three fundamental converging shifts in consumer mentality, how they were looking at traditional financial services. Due to collapse of the financial institution, in a sense, there was an incredibly low trust. People didn't trust banks. They don't trust banks now, but that was a historic low. Also, at the same time, regulators said, okay, it's enough. We need to bring new people into the space and allow them to shape how the future of financial services will look like, because the way it's been done right now is not really sustainable. And that's where the deregulation came in, and non-banks were allowed to do banking. People like me, who had no idea what banking was, just wanted to build something better, were allowed to give it a shot, which was huge difference before, to the comparison to before 2008. And of course, digitalization. At 2007, the iPhone, things took off. And these three trends came together and really shaped what happened next. So that's where the fintech was born. And VCs captured this opportunity and saw an opportunity straight away. So from 2010 until 2015 and then 16, 19 billion in capital flowed into new financial services. New companies were born to attack every single piece of a bank as you know it, trying to reinvent it, trying to change it. So, follow the money, that's a good saying, and money really transformed a lot of things. As a byproduct, there's a lot of us out there who were born and we're suddenly attacking every single piece of a bank, pretty much. So transferGo is solving cross-border payments, bank-to-bank payments, making them faster and more efficient. Other guys have been attacking loans, insurance. All of us just flocked into that space. But together with this insurgence, what we saw, what's very interesting in my view, is that many people who were successful in coming in didn't come from a financial background. They didn't come from financial services. They came from digital, from great product businesses that really had a consumer at the core of their value proposition. And these guys didn't have the baggage of financial services. And that's why they started to innovate quite fast in many respects. And the result of what happened is quite phenomenal. Now I'm going to talk specifically about cross-border payments, because that's the area that we are most knowledgeable. But in a sense, similar curves are witnessing right now in investments, in cross-border payments, in insurance. So the cost Over the last 10 years, the cost of a transfer roughly has decreased by 25% globally, from 10 to 7.4%. And that's World Bank data, right? So this happened because we came in, but it didn't happen because of only us. Banks followed, but their following was a bit slower. So the top graph here shows the average cost of a transfer via bank. So it was 15% in 2008. 15%, and there was no transparency on it. And no one even knew that it was the pricing. And now it's 10%. You know, it's better, but it's still not great. But you know, they're moving to that direction, which is also a very interesting thing, how a couple of companies managed to actually reshape an industry that had no other option but just to follow it. And at the same time, banks managed to adjust, but cash really struggled. Major cash operators, and there's a big office in Vilnius for representing one of the companies. They really struggled to adopt, and their cash businesses were stagnant, and that's their financial results. So digital was winning, cash was losing, and this was driven by new guys coming into this space. So by new guys, and you know, all of it, guess who won all of that? Guess who was the main beneficiary of this change? And that's, of course, the consumer. And here, I would like now to touch upon some of the, using transferGo as an example, some of the key changes in transformation that we had, and changes in approach, or what drove this change in consumer behavior, which is, we have set a new standard for what's low cost, how much it should be, how much you should pay for a transfer. So, you know, even now, as banks charge 5 to 7%, we charge 0.4 to 1.5. Other players are coming in with interesting freemium models, trying out different stuff, but it's all orientated to drive most value to the consumer. Before 2008, that wasn't really a focus point. The focus point was to build a monopoly and, you know, barriers to change, rather than to provide a product that people use, which is common sense in many other industries, but it wasn't a very short while ago in financial services. And as a result, after only 4 years, us as a business, we have saved from 15 to 20 million for our consumers. And others are doing similar good work in different areas, saving a lot of money. And it's, you know, we now service 200,000 clients, so it's still a long way to go and a lot more saving. And this has actually transformed lives of a lot of people who had to do cross-border payments, who send money back home, for migrants who really migrate because they have no other option. So this 15 to 20 million is a big number, and that's how that's a point of view of an industry. That's not part of point of view of us. I mean, it's a lot of good companies are looking at it completely differently than they were before. Same happened with speed. Again, I'm using us as an example. Now, bank-to-bank transfer is 30 minutes guaranteed delivery. This is an innovation that hasn't happened before. It happened because we were allowed to try out new stuff, new models, and again, other companies are solving problems in different areas, but they have the same attitude towards building a product that actually will enrich people's lives, because the competition is just very perfect on that respect. And this is the last point, and this is probably the most important point. We are building services that people love. And I'm not sure how many of you know NPS. What's Net Promoter Score? Raise of hands. Oh, good. More than in London. Okay, good. So 83 NPS score is phenomenal. It's world-class. People love the product, and we have remarkable reviews. And that has also never happened in financial services. You know, people were using a bank because they had to use a bank, and they were just dealing with the problems. And so this transformation in approach is really phenomenal, and I think that's what we are most proud of. And there are, of course, many companies that are doing similar good work. So, and as a result, we have, in every single cross-border payment corridor, money transfer corridor we came into, we won market share incredibly fast. So we are now one of the leading providers for Central Eastern European Europe. People sending money from London, from Germany back home. we own 10 to 30%, depending on the corridors, which in 4 years, the transformation was incredibly fast. And one of the reasons why this happened, because not only we had a different approach to how we look at consumers, we had a different approach on how we look at working with other people in our space and in other industries. So this is a DELFI stage, of course. So the first and most important mention is our partnership with media companies such as DELFI. So, you know, we want to work with DELFI because it's a great synergy. And DELFI are looking for new ways to drive more revenue for themselves. So we have come up with an idea to do what's called white labeling partnership. So DELFI drive us traffic. We do the revenue share based on how many people transact and what are the transaction costs, etc. So this partnership is a sort of a media, is quite standard elsewhere, but in the Baltics, one of the first ones, I think. And this is, you know, bringing two brands together and fintech working with media, solving different problems. That's also ethos of a new financial technologies companies. I mean, banks never had to do that because they had other options in place, whereas we are always looking for ways to, you know, improve people's lives and be where they are. You know, if people are on DELFI, we want to be on DELFI. If, you know, and equally DELFI wants to be part of this very vibrant financial services revenue stream. So that's one media partnership. Hopefully I'll be able to report more data in the next login. The other partnership that we had is traditional banks. So banks see this transformation happening. They're witnessing it on the front line. And over the last 4 years, we've been building partnerships with banks because our service could not exist without traditional players because, you know, we have to have a lot of bank accounts in order to facilitate the transactions. So it's still done on banking, but it's just done in a different way. And banks have also turned their view around, and now they are working with new players, which also facilitates their growth, right? So we always want to work with them, and my bet is that the most innovative banks, the ones that will work more and more with the fintechs, will be the ones who will be the most successful in the next 5 to 10 years, because that's where it's going. So bank partnerships, that's also a very important part of our business. Blockchain, a lot of people probably, how many heard blockchain? Yes, few, good. So we're always looking for what's the next leap. I mean, we made the transfer 30 minutes, how do you make it 1 minute? We made transfer very cheap, how do you make it completely free? How can we really bring even more innovation to the consumers? And Ripple partnerships is a very good example. Ripple is a company based out of the US, and what they're trying to do, they're trying to build a better way how national banks communicate with commercial banks, and then commercial banks communicate with money service companies. So, you know, one of the reasons why banks struggle to send money from one bank to another, because the system of how we communicate is quite old. It's called SWIFT. It was built after Second World War, and it says a lot about how advanced it is. Whereas Ripple want to use blockchain type technology to make it effortless and real time and actually at very low cost. So, and we want to be one of the first ones to move in and build a new network for consumers. A network that will not only be confined in the applications, it's going to be around the web because it has the scalability that other networks do not. So new partnership, new players in the space, also very interesting. And last but not least, client partnerships. Many of you maybe are not familiar, maybe not thinking in this way, but when we think about client partnerships, we think about refer a friend. When you have a good product, it makes sense to facilitate more of the word of mouth, which is why we have built a refer a friend program when our consumers can refer their friends, can refer their co-migrants who also send money and help them save money and earn money themselves for referring. So I think over the last couple of years, we have paid out more than 500,000 in bounties. So we're helping migrants earn money, we're helping migrants save money. It's a very positive loop. And as the byproduct, we're building a large scalable business. So this client, and we actually work with these people, work with our clients to help them refer better, understand how to market them, how to market our product better, sort of building an army of advocates, which is what we want to do. And it's better to give £20 to a migrant in London, Stratford, rather than pay £20 for Google AdWords. Google is our partner, but consumers come first. So that's partnerships. And for the last piece of the presentation, I'd like to talk about what's next. So this slide shows that it's just the beginning. So if you would point your attention to a blog that says 25 on it, this shows that payments was the most attacked segment from the new players. That's where most money came in. That's cross-border payments. VCs were still are very excited about that space. So this 25 graph, now the segment here we talk about the new players only have 5 to 7.5% of global revenue. Even in payments today, 95% of revenues are still with the traditional players. So this just shows how early we are in the transformation. Yes, we have done a lot in the last 4 or 5 years, but it's just starting. And if you look at other segments, it's so much opportunity. So I encourage everyone, if you're thinking, should I go into fintech? Is it too late? Go into fintech and do stuff there, because there's plenty of room and plenty of exciting opportunities. And actually, the changing mindset of traditional players makes it now easier to start working with them because they're more adaptive. So it's just the beginning of this transformation. And also, we as fintech are becoming more powerful, and our influence is growing. This is a report from PwC that says that 82% of incumbents, which is banks, expect to partner up with financial service. 82% now expect to partner. I remember 4 years ago when we started, to open a first bank account was mission impossible. And it was very difficult. Banks didn't want to do it, and now majority of them already are open to doing it. So it's a very good time to go into this space. And banks are also changing to this partnership mode rather than monopoly mode, which is incredibly exciting. Who thought this could happen so quickly? And yes, and this is another illustration. So 32% say that they already engage in partnerships with fintech. Right? So it's not just talk, it's also action. And we are working with many, many good banks, including Scandinavian banks here in Lithuania. Very, very innovative, very adaptive banks. So I think here in Lithuania is an incredibly good place to start and launch fintechs, because you have a Lithuanian bank who's a very innovative regulator, and you have very technologically advanced banks that can actually work with you. So do it from here. Don't need to go to London. You'll go to London once your VP is done and you need more money, probably. But it's great to do stuff here. Yes, and that's about it from me. My call to action for this is let's partner up. Let's continue changing the financial services, because it transforms people's lives. And I think most of the innovation is still ahead of us. Majority of it is. So I wish you all the best of luck in that. And I'm willing to talk to anyone who has ideas or partnership ideas. I'm here. Let's chat. Thank you very much.